Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot.
Yeah, but we all think you're crazy.
You don't fight this. No way.
The markets are freaking out, and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is the day CPI. We've been waiting weeks for this, man. And the market, I think everybody is expecting this number to be big. Oh, man. Come over to the charts. Let's just see what happened overnight. I was super frustrated yesterday in the treasuries. Looks like a squeeze out to me, but here in the overnight action, they moved back down. I took my position off, took my licks. It's okay. I am going to put one on here for the news. We'll see what happens. Whatever happens, happens. You can see, though, a little bit of steepening in the 2 and 10, but not in the 30. So I'm not so sure if we're going to take this. I'm not sure if the 30 is going to steepen on this move like it has been. We could see a bear flattener. Okay. ES also struggling yesterday. The chart doesn't even really show it because some of those small caps and stuff just got absolutely drummed yesterday. They just got slammed so hard. So oil also hit pretty hard yesterday, but recovering. So that's good. Well, I say that's good because I want the oil to go up. Natural gas also, well, okay, so there's been little bull runs in natural gas. There are some hints that a polar vortex could come and things could get cold. Okay, so natural gas might shoot back up here. Okay, gold and silver still continue to struggle. Hey, if this CPI is good, then that's going to change awfully quick, right? Copper, silver sure is languishing though, right? And then we come to cryptocurrencies yesterday, not so hot. And they didn't break a new low, but they're like on the edge there, man. And it would not take much to just completely throw them over the edge. So, and the dollar, well, the dollar continues to be fairly strong. I mean, it's not its strongest, but 96.4. I mean, 96 is just so high for the dollar. Pretty crazy, right? So that's where we're at. And again, remember, as Biden pointed out, and I think that he's helping us out here, Biden is saying that a lot of the decreases in energy costs, they're not going to show up in this CPI. He's absolutely right. The core CPI number is going to be what we want to look at, okay? So core CPI month over month, we're looking for a reading of spot 5. All right, I will add an alert here. When actual is greater than 0.5 and actual is less than 5.5, I'll just straight alert because this thing is going to move no matter what it does. What can make the bonds go up? Well, okay, so if this number comes out and the CPI is core CPI is like spot 3 instead of spot 5, then bonds could definitely buy up on that, right? Or remember, as we kind of discussed a little bit yesterday, but don't think about it of, is this priced in? Okay, it comes in. Of course, we have like the median consensus, and whether we're above or below the consensus has a big deal to do with whether we move up or down. But what moves the markets? The orders move the markets, and you need to think when this comes out, what are people going to think and do based off of that? What orders are they going to submit? So who wants to go long bonds? Nobody wants to go long bonds right now. It's awful. It's a very systemic short. What we saw yesterday, probably short covering. Okay. Shorts getting squeezed because there's too many of them in it. So if that CPI is under the estimate, Yeah, we could see the treasuries buy. But I think that it would have to be significantly lower than the forecast for it to matter. Because even if it's like, if it was like spot four, if it's like spot four, we might need to go into the report and kind of sort things out a little bit. But I don't think anybody, I tell you, I mean, I hate saying these sorts of things, but I think it's extremely unlikely that we're going to print lower than the forecast. I think pretty much everybody is expecting the forecasts to be low. So we'll see. But that does kind of set up an asymmetrical situation where if it is low, there's going to be a lot of people puking here, right? Will higher than expected inflation break down cryptos? I don't think that we should assume that. In my opinion, if we get higher than expected inflation and interest rates rise significantly, then it is likely that the Bitcoin will fall on that. But it might not do that initially, okay? Because the people in Bitcoin, they think that Bitcoin is an inflation hedge, right? It's just that, like, the correlation is with the interest rates isn't very good. When the interest rates rise, Bitcoin doesn't do well. So the move that you might see initially in Bitcoin might be deceptive, okay? But the move that we see initially in Bitcoin might be confusing and not in line with like what it should be. if you catch my drift, right? Potential taper talks on Tuesday as well. Well, I mean, I'm almost certain that they're going to double the pace of the taper. So it was maybe if Omicron was really, really bad, then they would be like, oh, let's back off. But otherwise, the problem is you talk about pricing something in. Well, we should be able to calculate what the 10-year should be based off of a faster taper and 2 rate increases next year. But I don't have the models all written to do that. So that should be part of our Christmas project if we get through with the stats and TensorFlow. Man, this is going to be it really is the most anticipated CPI print of all time. Nassim Taleb, inflation is not coming from wage rigidity, money supply, or supply chain disruptions. All of these are bubkiss. It is in the 120 trillion of paper money. Low interest rates inflate assets. Paper money is just okay. He says so. I think it probably is the case. It has been that we've been sending too much money off of too few assets, and it was only in the financial markets, and now we've unleashed it on all of the markets. Yeah. Any thoughts on the metals? Well, so if this inflation print is high, then I think we should see gold go. In fact, we're seeing some buying in gold at the moment. It's kind of like coming around. So I think people are buying gold in anticipation of this event. Kind of depends on a couple of different things, but last time around, you kind of like when we had a big CPI print, gold and silver did eventually move higher, right? Woo, there goes all the liquidity. And my heart is beating. Oh man, I should calm down, Seth. What you do is not going to affect what it's going to do. Okay. Okay. It is higher. Okay, so the core CPI is in line with forecasts. That is why they're buying. So that wasn't so bad. Okay, so now that we're going to get a buy, I think that this is one where it's like you're going to get your move, you want to take your profits and then end. Because even though it's oh man, this is like such an interesting way for it to turn out, right? Okay, so again, US CPI month over month, spot 8%. Core CPI, which excludes food and energy, was spot 5. So the core CPI, the one that I was saying we should pay attention to, that was in line, and that is why the bonds bought. Okay. Now they are going to, they're probably going to retrace this. I don't know if that rise is sustainable, right? Basically, like all of the guys that wanted to go short, all the guys that were long rates, like myself, puke, took a $20 loss there, and which hey, is given the situation is okay. Given the situation is okay. But here you still kind of have to sit there and look at it and be like, okay, but is this going to change the Federal Reserve next week? So do you want to take a long-term position here on it? No, like you're going to get a short-term repricing in it. So if we want to make our money, and it's a Friday, so this move might get really messy. Okay. I think given that I took the loss here, should I try and play with the micros a little bit? I think that I'm going to need the spread to come in a little bit here for me to play in the 10 years. So I'm going to try taking some of these. I think that 1 spot 5 would be appropriate. So I'll hit that. And I will just kind of play the okay. Jeez. Okay. That was a good trade. Now they're back to, you were around where they were yesterday at 1 spot 5. Now on the split side, stock market's going to love this, right? Yeah, gold is going to get, well, so interestingly enough, gold is actually up at the moment. I think though the reason that gold is up at the moment is because the dollar is just getting clobbered. Look at the dollar there. So we didn't really talk about what will gold do in the case that in the other case. I'm a little surprised that golden. How much is silver taking off here? Silver is really taking off above 22 here. And what about is oil responding to it too? It is. Oh, well, this is very interesting. But I think that what is happening here is the treasuries are moving up, the Japanese yen is moving up, and therefore the dollar is moving up, the dollar is moving down. And the reason that gold and silver have been kind of hurt the past few days is because of the stronger dollar. So the weaker dollar here actually ends up being useful for gold and silver. That is a very unintuitive result that I don't think that I would have possibly have predicted, but I think makes a lot of sense now that we're seeing it happen. Energy stocks are a license to print cash, you say? Well, I'm interested to see where oil goes here off of all of this. I mean, we're still thinking that oil could be $80, $85 a barrel in the next few months. They took a little breather yesterday, but okay, so we went back up there. They're kind of ranging back here again. I'm wondering what I should do. I think that on this one now I want to monitor the liquidity in the 10-year and see what kind of a hole we have behind ourselves. Okay. So they hit 10, but then they were willing to stack and push up, and they're actually taking some at 10.5. Interesting. So that's a little bit more than I expected. I could maybe buy on that just for a small little scalp. Ooh, actually, they stacked at 10.5, so they're playing the games. They're playing the games. And now, by the way, what is the yields doing? They steepened so far. So far they've steepened. We may get a flattener come in here though. Okay. Cool. Okay, this one, I think I'm getting lucky on it because it did not completely play out the way that I had thought about it in my mind. I'm gonna take that off there if I can. Because that 10 is being, see that? That is what I was trying to avoid. Okay, let me take a small loss on that one. Okay, so there is a little bit of a hole here below us. It looks like they're gonna fall back into it. Let's see. So again, on the treasuries, wouldn't be surprised, given the result and everything, if this doesn't like retrace and or even like turn around and go lower in the end. It could do some unexpected things just because even though the CPI print it was in line, it wasn't necessarily good per se. And so does that what does that change for the Federal Reserve next week? I don't think it does. I think that longer run, you still want to be long rates, right? Look at that coming back. Okay, so they're picking it up a little bit more liquidity there in the 06.5 area. Hey, Caleb, how are you? So they're trading 1500s in this area, which is more, but it was just recall that like that's what we should be trading like on a standard basis normally. And the liquidity going all the way back to the event is pretty ish. And I took a little loss on the initial move there in the CPI, but it's okay. Have you got any good educational content? I think I have a lot of good educational content. If you go to the channel page, I have a playlist for like getting started. I also have like my most recent videos are kind of more order flow based. I have 2 more videos coming in the order flow series, but I'm going to wait until next year to record those because I think that I'm going to be able to really improve the quality of those videos. Probably after that, I think that I will make another video that will be like a true getting started video to replace the one that we had before. Okay, so they are pushing back up here. It's kind of hard to play this one because liquidity is pulling out of the way and there's so much market volume coming through here. We might be able to look for some situations where the spreads are out of line though. I'm kind of wondering though if we're going to get a flattener. So far it's been steepening. Pretzel, how I'm feeling in the market these days. December has been so hard, man. December has been a real roller coaster for me. I mean, of course, I made that huge mistake trying to play oil the way that I did. I really regret that. It's okay, we'll move past it, but really shouldn't have done that. I'm just finding like whenever I'm doing something new, I just always fall flat on my face the first time, and kind of looking through all of this, like yesterday, I really wanted to try and hold a long rates, preferably all the way into the Federal Reserve meeting next week. But I'm kind of now realize that was maybe foolish. And what I should have been doing is like reducing my size. Because yesterday just ended up being short covering, right? Could have avoided that. So like, how do I manage a position over several days? Totally new thing. Yeah, I was trying to buy oil. I gave up on it after that, after OPEC. And that was right when we would have caught our winner. But I was, I think that one was, Seth doesn't understand the oil market very well. That's what that is. I learned a lot about the oil markets lately, and we're watching it more closely now. But we kind of decided that it's probably better to play that kind of a move with some sort of an options play. We'll see if that one works out. So far it's been okay, although yesterday certainly didn't help. But where we are now, let's see here. With oil having moved, where does that put us now in relation to yesterday? Not quite there. They still need to be, we want to get them above 73 today if we could. Okay, so I'm detecting a little bit of ranging, and there's also some big orders kind of on both sides of this. So they might get stuck in a hole here. Let's see. I'm going to keep centering it here. That sure looks like it right there at 07. Maybe not. There's still too many people interested in trading it to get that they basically, even though there is a little bit of a hole there, it's probably too easy for them to push out of it. Well, okay, that wasn't too bad. What are you using for? I use Jigsaw Day Trader. If you look in the video description, because I'm an affiliate for Jigsaw, so if you look in the video description, I have a coupon that gives you $100 off of Jigsaw Day Trader. And if you buy it through my link, you get a $100 discount, and the channel gets a commission. So, well, that big old order at 06 then wasn't willing to stand up there. Well, they trade right through that. Yeah, he was smart to cancel. Well, look at that. They're just gonna careen right through there. Does it have availability on cryptos as well? I no, maybe probably not. I was thinking that if you go through NinjaTrader, the NinjaTrader bridge, and you use like Coinbase connection, you might get it to show up for cryptos, but I don't think that there's anything like built in for it to do cryptocurrencies. And honestly, although I think a DOM would be super, super useful in trading cryptocurrencies, it would still be very, very different from what I try and do here. Because with here, there's a lot of correlations that we can watch, and we've got all of the order flow in one spot, and there's a lot of informational edges that we can utilize here. In cryptocurrencies, none of that really exists. It's all just predicting the incoming flows, and unless you are an insider that's knows what people are going to do, I don't think that you can really reliably do that in the cryptocurrency world. So I don't necessarily recommend trying to scalp cryptocurrencies. I would make a bot for that. It's like where having a human trying to scalp it becomes useful is because the human can utilize informational inefficiencies, because the market is not very informationally efficient. But in cryptocurrencies, there's not a lot of information for them to even be trading off of. So, hey, good morning, live action. Did you take a trade off of this? And interesting to see how this goes. I'm wondering, they are so they pushed down a little bit, and they came back to this hole at 07. Now they keep skipping across it really quickly, so like there's still a lot of trade going on, but there's definitely a hole there. Wow, you took 4 micro ES, not bad. Yeah, that would have been a great trade, especially if you had it like before the news. That's like let's see here, 20 bucks is $100, right? Sorry, 20 points is $100 a contract, so that's $400. Do you see a situation in which this doesn't end in extreme inflation? I don't think that hyperinflation is really on the board, to be honest with you. I do think that we have high inflation. I think that this high inflation is going to be more persistent than anticipated, but I don't think that it is going to be hyperinflation, or that it's going to be like, like a 30-year thing. What I think you're going to see is that the next 10 years is going to be accompanied by a higher than usual inflation, compared to the last 10 years, where they were always kind of underperforming their inflation targets. And I think that in the future, they'll always be kind of outperforming their inflation targets. But I don't think that it's going to lead to hyperinflation, because when you look at the arguments, like here's one of the problems that I see with like that: is it transitory or not? And I the real problem with the transitory debate is the argument over the definition of what is transitory. Okay, so for the purposes of this, I'm talking about inflationary pressures that are going to be here in 2023. Well, even if you say that it is because of the the stimulus, the money, the stimulus that we put in, and not because of the supply chain disruptions that we're getting that inflation. Like the stimulus is over. It's ending, right? So what do you do there? You know what I mean? Okay, they're gonna make another run here. Let's see here. I crushed 60 in ES, but ZF spiked below overnight low, got me upside down with sell stop at worst possible price. Oh, geez, yeah. Well, so like I was saying a little earlier, guys, this is going to move around a lot here at the beginning, but this is probably a Friday where they go home early. You're going to see a situation where the guys that made money off of this CPI are going to make their money and go home. And you're going to have a ton of other guys like me trying to make their money back. And there's going to be indications of plenty of trade for us to do it. But then, like, we keep getting disappointed. It's probably what's going to happen there. So let's just note there is a slight liquidity hole somewhere around the 07 area. But because market order volume is still high, they are bouncing around here quite a bit still. And there could well be holes up in the 12 area too, in the 10-year. So we could come all the way back up here and settle. I do kind of think here, though, that there's still going to be like okay, it wasn't like a terrible print, but the Federal Reserve is still going to raise. And so in the end, the Treasuries succumb here, I think. But that might not happen today. And it might be a little more complicated than that, just because it seems like the correlations with the dollar right now are much stronger than anything else we've got going on right now. I'm gonna put something right there just in case. So it seems like if they're going to give us 1.5 again, that it's going to be hard to get. You're surprised it hasn't retraced back to 85? Or you mean 08.5? No, see, okay, so as you said, CPI is good, Fed won't, I don't think that's how I would read that. Now, Bitcoin, let's see here, did Bitcoin move up? Yes, it did. Wait. Well, they were kind of already moving up this morning, but they did bounce off of that particular piece of news, so... But let's just remember that the headline month-over-month number was spot one higher than anticipated because of oil. And the core CPI was in line with expectations. So that's not necessarily good, if you get what I mean. Have you looked into XRP at all? Well, so I think that XRP looks like much more effective technology than Bitcoin and so forth. It is kind of really more a security than it is a currency. But I also think, based on what I've seen, that in the past that XRP has been manipulated a little bit. So you kind of got to be a little bit careful about that. Like when they got sued, they just got absolutely clobbered, right? And that's the sort of thing that you've got to be worried about when your coin, it looks like it's heavily manipulated, right? Potential for a new global reserve. Oh, okay. So, one of the things that I see a lot of people say in XRP is like, oh, the US will just decide to use XRP for their. No, I'm sorry. It's not going to work like that. They're working with MIT right now, and they're going to make a new coin. So, and this is a big problem in the cryptocurrency industry, I think, is that like the Federal Reserve is going to make a digital dollar, and everybody's going to use that, guys. This whole thing that like Bitcoin will become the world's reserve currency and all of that stuff, it's absolute nonsense. It's not going to happen. They haven't even taken into account energy. Expect 2 months CPI to be super low. Fed won't do anything. Well, so again, like spot 5 core CPI is not good, right? We want it to be spot 2, spot 3. Spot 5 is high. It was in line with the analyst expectation, but it's not low. So particularly in regards to will the Federal Reserve taper and raise rates and everything, I don't think that this print is going to change that. No way. My nose sure is itchy this morning. So let's see here if I see anything. Biden needs to look at the Wall Street economist consensus before he front runs the data next time. That is kind of an interesting thought. Like I've kind of always been of the mind that the president and his team can see a lot of these economic numbers before us and prepare themselves for it. But and you saw that a number of times with Donald Trump, particularly with the jobs numbers. But this time it doesn't seem like that was the case, huh? Will next month's CPI be lower? That's a possibility. But the next month's CPI numbers being lower would not change them tapering, though. Like, you understand that the taper is like a temporary situation that they want to get out of as quickly as possible, right? And the only way that they're going to like back off of tapering is if like next month's CPI ends up being spot 2 or something. Yeah, they're going to taper because jobless claims are already under 200,000. There you go, exactly. We are at full employment. They have to taper. And quite frankly, and here's the other side of it. Remember, the Federal Reserve at this time believes that the risks to the economy, particularly the risks to the economy of another wave, virus wave, are inflationary, not deflationary. Ergo, they want to taper so that they are in the position to raise rates if they have to, if more supply disruptions or whatever come along. That does not mean that it will be a turning point for the stock market. Well, I'm just saying interest rates are still going to rise. I really don't see how you sort out like, oh, okay, the inflation number came out in line with expectations. Ergo, the Federal Reserve won't taper interest rates. Are you kidding me? Well, The situation is much better than anticipated. The way that I would put this is that there was a very high risk on this news event of getting a number that was really, really bad. And we came out and we got a number that was bad, but was in line with what people thought it was going to be. That's a very, very positive thing for markets and risk in general. And you can see the way that the S&P 500 is reacting to it is very appropriate. But in that situation, that's good for risk assets. That doesn't mean that they're not going to taper. And you keep saying that rates don't rise, but there's absolutely no evidence that they're going to do that. You don't think that they'll double the taper? I don't know about that one. I don't think so. Because again, so think about it like this. Okay. There's the Fed Governor's Board, right? Pretty much all of them have said that they are in favor of increasing the pace of the taper. Okay. Like pretty much all of them have said that. That's a given. Okay. So in that situation, they come in now and they're looking at this CPI number. Okay. And what is this CPI number? It's what they thought. The economic situation today is what they thought. So why would they come in and change their minds and say, okay, now I don't want to double the pace of the taper? That doesn't make any sense at all. The guys in the Federal Reserve, to them, this news release becomes a non-event, really, because it was expected. You get what I mean? And that's why I say, like, well, I didn't get things there with me thinking maybe they would come to 1.5 and then go back the other side. But I think you could see, treasuries be held up today, but then next week sold is I think a likely situation. For now, though, I think especially the currency correlations and stuff that we're getting right now are going to be pretty strong, right? So we're getting maybe a little bit of flattening here, but like the steepener that we had is flattening back out. That's probably the bet I should be making. Oh yeah, we'll get consumer inflation expectations in an hour. That's going to be important stuff too, right? Some fishy business going on there at 14. Shark Tank's Barbara Cochran bets on Zillow stock and housing boom. Well, oil was pretty well lifted there after the CPI. They're coming back quite a bit now at the moment. Gold still seems to be running. I wonder if gold can get back to 1800. How can which prices? Probably you are going to see some wage increases at the beginning of next year. Oh, housing? Well, the housing prices came back a lot though, right? Things are a little bit more a little bit better for house buyers than they were. Well, I don't know, guys. The way that kind of played out is the sort of thing that can lead to a reversal. This is a little weird. Not saying I think a reversal is happening. I'm just like, I'm putting it on the table now. STEM campaigns were specifically to put in place to reduce engineer salaries, for example. 100%. Yeah. There is an organized effort to try and get more engineers out there so that they don't have to pay them so much. I don't think it's going to work out the way that they want, though, because a good engineer is hard to come by. You know, like a good engineer is like 10 times better than an average engineer. So what we should see here if we flatten is the 5-year come down faster than the others. At 12 though. Now, so that's a little interesting because they have a spread. So yesterday one spot 5 was at 130.12, right? But now it's a little bit different. It's changed by half of a point. So that shows you how much the spread has changed. Just a teensy bit, but for sure. But most engineering jobs are just technician jobs, though. I don't know, man. So like when I think about it in the computer science world, like a lot of the stuff that I end up doing from day to day is like modifying configuration settings and stuff. But like it still takes like an understanding of the systems and like the best ways to organize the code and stuff. Like I'm doing something that seems really trivial to me, but that most people can't figure out. Or don't know how to do, at least. Trading Floor Audio tweets, as the North of X points out, US CPI was printing at around 2.6 year over year, and the US 10-year yields were above 1.7 around March or April of 2021. Now, Today, the U.S. CPI printed 6.8% year over year, and the Treasury yields fell 1.48%. Makes perfect sense, doesn't it? Well, it does make sense because it was less than expected, and that caused shorts to cover. That's why. Yeah, but what I'm getting at is that like the whole thing about like bringing the salaries down, I don't think that that's what's going to happen. I think that what's going to happen is that the people that are the good engineers right now are going to continue to be in jobs that are difficult and not very many people can do well, and will continue to get paid highly. They'll try paying people less and having problems with it. And then there will be other jobs added, is what will happen. And these lower trained jobs will come out. They'll make more use of people like QA testers and that sort of a thing, which has kind of decreased a little bit in the industry over the years. Because like the problem isn't that you're just not getting enough people interested in it. The problem is that not everybody can do it. Most people aren't interested in it because it's hard for them. And it sounds silly, but I never understood what you mean when you say the price is spot. So the British, instead of saying point when they're talking about a decimal, they say spot. So the CPI number, the core CPI number came out at spot 5%. That means that it was 0.5. And I like to say it that way because I think that saying it spot makes it a little bit more clear that there's a decimal point in there. So I'm saying like 1.5%. It's kind of this key area in the Treasury that you would expect them to come up above at some point. See, so Traders Community says this is the largest increase in U.S. consumer inflation since June of 1982. In November, their CPI was 6.8% year over year. Any thoughts on the safest long positions? Right now, longer term? Well, if I had to put money to work today, I would probably be more likely to put it into the S&P 500 than anything else, right? Man, they just wait for me to get into that and then smack it the other way, dude. Yeah. Really though, if I was going to put money to work, I would be much prefer to take some time and find the right stock from a macro perspective. I suppose that being long a bank stock would be okay, I mean, that's kind of where I'm positioned, at least. Well, they're kind of threatening to go higher again, but it's definitely slowed down, hasn't it? So let's look at the deltas, by the way. Oh, that is interesting. Oh, what? So the market orders overall have been sell this whole move. How are you looking at banks? Just the banks will do better if interest rates rise. So you probably want to own JP Morgan or Goldman Sachs. They're kind of like the best in breed. Really, it's JP Morgan, I think, is what everybody considers best of breed right now. I'm not sure if the cumulative delta that I'm seeing there on that is correct. It could be an artifact of the way it's moving and so quickly and stuff, but that is like small I mean, the possibility that the rates go lower here are very small. And in that case, you're seeing another economic calamity, right? Yeah, think about the interest rate cycle. It goes high and then it comes down and then and you are right here at the bottom of that thing. Now, are we seeing buying? Oh, so I wonder if maybe what's going on, maybe what could go on here is those guys that have been selling through it this whole time are going to get squeezed higher, maybe? Good morning, Gus. What do you mean the narrative about raising rates doesn't seem sound? Why? I don't get you guys. You're all so skeptical that they're going to raise the rates. I didn't understand. How can literally every Fed member come out every time that they're say, we probably need to increase the pace of the taper and we might raise interest rates 2 times, and then all of the markets price that in, and none of y'all still believe it? I don't get it. And then we have a CPI number that comes out in line, and then we're like, oh, well, they're definitely not going to raise rates now. It's not hyperinflation, so they're not going to raise it. Come on, guys. I'm looking at this and I'm like, they're giving us a great situation to go long rates next Monday. If not today. if not today. So they came back. They kind of did that thing where I was like, oh, that can lead to a reversal, but it did not. Just the way I'm willing to put money on it. Listen, if you don't think they'll raise rates, then buy the treasuries. Be my guest. Buy treasuries, go short banks, go long tech. Go ahead. Yeah, we'll go long rates. Not today, obviously. I mean, not for a swing, maybe for a scalp. The debt ceiling is going to increase, yes. I don't think that really matters. You could do a hands in France pump you up pre-market. Should be. You know, like you're long the 10-year. Okay. Have fun with that. I don't think you're going to be very happy by the end of next week, though. There could be another crisis around the corner. You realize that betting on that crisis coming, like, is not a very profitable strategy, right? Like, there's been people that have been trying to do that for 10 years and finally had to just give up and retire. Is this relation true every single time? I mean, rates raise, treasury bonds and notes down. I don't think I've ever seen a situation where that wasn't the case, but you got to remember that what the treasuries do is based off of the orders and not necessarily because of the rates, right? They're submitting the orders because of the rates. There could be a weird situation where they don't do that because of some really bizarre short-term liquidity concern, right? Any thoughts on MMT? I think that it has it's absolute. It has no empirical basis. It's not taken seriously in serious economic circles. I do not think that it's really going to become a significant part of Federal Reserve policy. It's overhyped. Even if you took an MMT person and put them in the Federal Reserve, all of the other people in the Federal Reserve would very quickly show them why they're stupid. Did you hear Putin say that Ukraine is Russia's Cuban Missile Crisis? Well, I think what is most likely to happen there is that Russia continues to have an influence in the Donbass region, and I don't think that it will extend beyond that. Biden is already basically giving it to them. So, is there a prediction? It's the Treasury market, man. No, that's not it at all. Well, guys. When you have deflation come into the economy, you're supposed to print to counteract it. Okay, if the Federal Reserve had not printed money at the depths of the coronavirus panic, then we would be in a depression right now. Okay. So that they printed a bunch of money, everybody's like, oh, they printed so much money, they do all of these stats, and it's like, well, yeah, because we had a really big disinflationary pressure that came through. And guess what? Like, the economy survived, it's all fine. And now what do? Now that the economy is rising and you're getting inflationary pressures, you raise interest rates and you reduce the money supply to combat the inflation, to try and keep the price stability as stable as you can. Maximum employment and maximum price stability. Modern monetary theory is not just print money, right? Modern monetary theory would be, even though we're getting hyperinflation, we should continue to just print money and stimulate the economy. That's what they're saying. They're saying that, well, because we're the reserve currency, we can't have hyperinflation, is kind of their take, right? What's happening right now is basically like a repudiation of modern monetary theory. It's the Federal Reserve saying we're going to continue to do what we do, which is when inflationary pressures come along, we raise rates, and when deflationary pressures come in, we print money to try and keep prices stable. See. I honestly I don't want to like insult you guys, okay? But I honestly feel like some of you are living in a cryptocurrency bubble where you're talking to a bunch of people that don't know jack shit about monetary policy or the inner workings of the Federal Reserve, and that you need to be spending less time with those people. Like, yeah, modern monetary theory is stupid. It's stupid, but it's not what the Federal Reserve is doing. The Federal Reserve is doing what they're supposed to do based on our past experience. That's why you keep saying, like, I just feel like everybody. That's fair. That's why I'm here. Well, there you go. I'm just saying what happened to the price after a high CPI number. But again, I don't. So here's the thing I don't understand with you, Eric Cages, is I'm explaining to you why it's playing out the way that it does, and you just ignore that, right? Why is it playing out the way that it was? Because a lot of people were short the treasuries here going into this move, because they all expected there was a high risk of it being a really big number, right? So you're seeing at the moment a movement based on short-term liquidity concerns, and it's not telling you anything about what the Federal Reserve is going to do next week. You're still making the mistake of assuming that what is happening to the price is all informational. It's not. Yeah, full employment and price stability, and in their view of price stability is 2% inflation average. Well, so here, let me tell you what's happening here with the Federal Reserve and printing money, is that if you take $1 and you take it out of the bond market and you put it into the stock market, it increases the aggregate market cap of the stock market by $5 to $8. You'd think that you put $1 in, it should only increase the stock market by $1. So if you're coming in there and you're like, we need to stimulate the economy and we need to put like X billion dollars in there, right? But you don't realize that putting X billion dollars in there actually increases the stock market by X times $5 billion, then what's going to happen? You're always going to put too much in. You can't argue. Yes, you can. The market is not always right. The market is wrong every fucking day. Let me show you an example, my friends. Do you remember this back here? What was it? Wasn't even that long ago. Like back on September 19th. Oh, look, we're going up. You see, guys, interest rates are going to stay high forever. And I said, no, the Federal Reserve is going to have to raise interest rates. Oh, whoops. Remember all of these people getting slaughtered? Oh, we didn't see this coming. Come on, man. The market is not informationally efficient. This is what peak inflation hit now. Like that's the thing that I think is the most funny of all, is that everybody reads this as, oh, we're so concerned about inflation. But then I come over and I look at the treasuries and I'm like, are they really that concerned about inflation? Because the treasuries sure ain't acting like it. Gold sure ain't acting like it. Oh, is it because Bitcoin's going up? You realize that Bitcoin doesn't go up because people are concerned about inflation or because of what monetary policy is. I mean, there's some moves about that, but you know why Bitcoin goes up? Because Tether prints money. That's why Bitcoin goes up. So you got to ignore that one from the equation. I wish that the Bitcoin market wasn't so manipulated so that you could factor that into the read. But I think that if you did, and Bitcoin was really only about inflation, I don't think that it would be taking off either. But Bitcoin isn't about inflation. It's more of a risk proxy. What's your expectation of future job numbers? Well, so the United States has reached full employment, essentially. So I think that you are going to continue to see the monthly employment numbers be somewhat weak. The BTC people on here need to be deprogrammed. I don't know how many of them are Bitcoin people. Might as well. I'm not trading well this week. I don't, when I took that trade at 485, I was kind of taking, or at spot 5 twice, I was taking it because of that point, and I don't think that I was really watching the order flow or anything. It was just kind of a, although the order flow is probably giving me some faulty signals too, because the market, there's a lot of market orders selling and it keeps going up. I don't believe in Bitcoin. I believe in the blockchain text behind it. Yeah, but I mean, I'm in that boat too. But I think I don't think that that's the central point of contention, right? Hold on a second. It's not that. It's not about Bitcoin or the blockchain. I mean, the blockchain is just a technology. What it's about is between fiat currencies and a decentralized currency. That's really what this is about, because from the blockchain side, like Bitcoin is the worst blockchain technology out there. Literally every other coin of the 100 coins out there, except for thousands of coins out there. And we take out all of the meme coins. The reason that they made these other projects was because there was something that they thought that they would do better than Bitcoin. So Bitcoin is literally the worst cryptocurrency, and it sucks. The technology behind it is very inefficient. Okay, but it continues to be the main show. So why is that? Well, I think that you have to admit at that point that it's not about the technology or about the blockchain, right? So is it about hedging against central banks? Because I think that that's the reason why these people buy it. Well, that didn't work out so hot when it was the coronavirus panic, did it? Didn't work out so well when the coronavirus panic happened, but I don't know. They continue to think that, but this is where I think that stable coins become very interesting, because stable coins are going to come out. Is Bitcoin going to cease being a thing? I think that once a U.S. central bank currency comes out, I think that things will be different. How that changes, I'm not 100% sure. Because there's going to be a lot of people that are going to realize that, like, oh, okay, like I could go and make these new technology and like new, smart contracts and stuff, but what's the point? Because everybody's just going to use the dollar. Everybody's going to build their apps on the digital dollar, right? So then you really do have to say Bitcoin is a store of value, quote unquote. Okay. But then you're going to have to tackle the tether issue, which is that it doesn't have any value in and of itself without being able to buy it with dollars. And it appears that they're using leverage and creating dollars that don't exist. So how does Bitcoin continue to go up once the government regulates that and they can't pump things up with tether anymore? Yeah, those decentral. Because the argument that they're trying to make is that the currency would be better off in nobody's hands rather than the government, and I'm not convinced that that's the case. I think that having the government in charge of the currency is probably the greatest financial innovation that humans ever invented. I don't think you want it to be decentralized. And I certainly don't think you want it to be deflationary, but that's kind of the funny thing about it, is that if Bitcoin wasn't deflationary, then nobody would buy it, right? Essentially, you can't make a cryptocurrency that is popular and would also actually be a good basis for an economy. How come you turned off the because, well, most of the time when we're talking back and forth like this, things kind of changed. I guess it was me that changed, but because the bot was always just interrupting, and so it was easier to just read them myself. Well, okay. People misrepresent the structure of the Federal Reserve, because the Federal Reserve is a private bank, okay, but it's a private bank where all of the decisions are made by people that are nominated by the president and approved by Congress, and they are given, and they have a charter that is specified by Congress, and what they do, their maximum employment and price stability, have to meet those goals. Okay, that the money is, all that it being private means is that Ron Paul can't come in and decide to use the money for something else if he decides to. That's all that really means. You say ES rolled over? Well, right. Well, so you could continue to trade the S&P 500 here this morning on the December contract, but come Monday we definitely have to move over, right? But Gus says that there's more volume on the March contract. Okay, fair. Man, I am just picking the absolute worst spots. Well, I guess yeah, 100 is somewhat low. We would rather be seeing 200s over here, but there's still a lot of volume trading over there. I'm not going to be putting any orders in or anything like that. But we still got news in 20 minutes, right? So you're still going to continue to see activity over here. Yeah, there's like a 100 isn't particularly good in ES. I wouldn't say that it's like crazy bad though. Like it's still tradable over there. I'm not going to be putting any orders in over there though. I think that for ES, we should just be cognizant, or, be aware that they are rolling over. And as such, you might see interesting stuff. And, I personally kind of don't like to trade it very much until it's completely rolled over anyways. So which one we're showing or looking at the moment, I don't think really matters too much. Now, what's this poll they got here? It doesn't show me the actual poll. Whatever. You're looking at the March chart and trading the December contract. Well, I'm surprised that when I came in and I did the sim orders on the 10-year over here, I was surprised at how well I did. But on the same hand, doing it here, I'm surprised at how bad this has been because I have not been picking the spots very well at all. Your morning routine. I wake up, I shower, I read the News Squawk morning briefing. I check to see what headlines are on Zero Hedge and CNBC. And I eat, and then I come and I sit down. And then when I come and sit down and I show you guys at the beginning, go through the charts at the beginning of the stream, that's usually the first time I've seen the charts since the day before. But I generally have a pretty good idea of what they were doing because of News Squawk, right? So after selling so much through that initial move, we're seeing the market orders just continue to come and come and come in the 10-year. It's not really, they're not really making much progress, but it is net market buys. That could switch, especially going after the consumer sentiment number. That one's going to be interesting, I think. Need to troll them. I take a freezing cold shower and then deadlift 200 pounds just to wake me. 200 pounds, that's not that much. The pound of bacon. It would take at least 200 to wake me up. Anything below 200, I'm kind of like, why am I even doing this? I take that back. Maybe more around 150. Anything below 150, I'm like, why am I even doing this? Do you even left? I do. Not very good at it. So, by the way, where are we now in relative terms in the 10-year? Not quite to yesterday's high, which would be 17.5. Have you ever heard of having runner's blood infused for higher brain power? No, I've not heard of that. That ES is kind of rolling over here, man. So I'm wondering now if some of this volume in the treasury is risk off sentiment, because the E-mini is just not happy at the moment. Bitcoin, by the way, is falling now to levels below where we were when the news came out. Well, you know what? I need to take a break. I want to do this before the top of the news at the top of the hour, right? So I'm going to take a break. I'll be right back. You must be the most calming trader. You weren't here yesterday, were you? Michael Saylor says, don't build on or use Bitcoin. Just convince others to buy it. I really hate that guy. I really do not like Michael Saylor. He is such a grifter. I was reading something yesterday. I need to go and verify this for myself. But they were saying that when you factor in the interest rate that Michael Saylor is paying on his bonds, that he's actually down on his Bitcoin position. He's actually losing money on it. Okay, so there's 17.5. It's kind of like, it's kind of hinting that they might turn here. Yeah, okay. And we got 10 minutes to the news. It looks like ES has found a little bit of support there. And a little bit of buying coming in. 92. Wouldn't be surprised to see Bitcoin crab between 40 to 50K for the next few weeks. With the amount of money that they've been printing out there on Bitcoin lately, if they don't jump back up, they've got bigger problems, you know? So one of the problems that we've kind of got here is like at 17.5 is like, how many shorts can you have to cover today? Because under normal circumstances, I would have expected them to have already sputtered out on the uptrend in the treasuries. Nah. The way it's trading there at 18 is a little like there's some squeezing, but there's some fighting it too. Okay. Somebody's absorbing some there at 18 to maybe try and do the level break, and normally that would be a pretty good buy there, but in current circumstances, that's probably random. We still got about 6 minutes to the news. Yeah. Well, they did do a little bit of a level break there, but it wasn't really that spectacular. Although sometimes when that happens, that just kind of means that they're just going to keep going, like that there's more fuel. I don't know, man. The volume is becoming a little different here in the Treasury, that's for sure. ES did have that short-term little pullback, but they're kind of turning down again. Bitcoin doesn't look so hot. Setting up for CPI was a mistake. Yeah. I'm wondering how much money was actually short here for the CPI. So it seems like it's gone further than it should have. In fact, we have to wonder if it's not into a trend day kind of a situation. So I'll tell you what, I'll go short. That will make it reverse. Yeah, there's lots of people short, lots of puts. It's just I'm not really sure how I determine like they're done, you know? Order flow doesn't necessarily tell me that. And if the ES continues to be ugly here, because he could have had help this CN, but happy. Yeah, I'm just not. I don't think that I'm in a healthy state of mind this week. I think that I'm still reeling from that oil and I've been making bad decisions. Because I had some like really good runner earlier in the week and I didn't really make much from it. And then I've tried taking a couple of little ones here on this, but you know, that adds up. It's not so bad, but that adds up. Well, jeez. Ethereum's hitting new lows. At least new local, you know, daily low at least. Matt, when you look at the cumulative delta in the ES, it's like it really flipped on its head there. So I'm not sure I can explain what's going on over there. Here we go. Well, the 1-year inflation preliminary came out at 4.9 versus an expected 4. It's expected 5. They seem to be buying on that. Although the sentiment was 70.4 versus 68. It might be just be confusing here. That looks like a level break. Yep. Easy peasy. Okay, but now they're stacking. Okay, hold on. Department of Justice is said to be pursuing a broad probe into hedge fund short selling. Well, they're steepening here, man. That news was not like strictly dovish or anything like that. It's just like this volume is just coming out regardless. But it's a little, yeah. I kind of, this is kind of a little weird. Ooh, it's coming back. Especially the 5. Especially the 5. Nobody's been trading the 5. Okay, back up. There is some volume coming into that 5-year. Look at that. It wasn't necessarily how you want to get filled. I think it's okay, but something that I think is kind of funny about like these numbers today is that really what today's numbers mean is that the analyst forecasts have gotten better at predicting how much inflation there is, right? This isn't like a negative change in the trajectory of the inflation rate. But again, I think that the main reason you're seeing what we're doing is because of people's positioning. These cumulative delta candles here are in the 10-year are getting awfully mixed up here. So I am potentially seeing a change in the order flow. See if that's enough to flip them back down. Well, that sure doesn't look good for them in the 10-year at 19 pulling. Yeah. Ooh, and look at that. Oh, I don't want that one. I don't want to play that one. A big iceberg there at 19, though. Bloomberg, U.S. COVID crisis threatens holiday season as U.S. hospitals overflow. After months of warning that vaccinations would ward off COVID-19 disaster, the U.S. is sailing towards a holiday crisis. Cases and hospital admissions are rising. Okay. A little change right there. Whoa. So I don't want to be in the 10 here with the way that that's going. Because one, we might be wrong, but then two, it seems like that if we do, actually, I'm not sure. I'm really not sure. Some of that volume there was a little scary. I'd rather have it be over here. Oh, maybe I was wrong. What did I get out of it? 7.5. Eh. Oh, is it gonna count? Okay, hold on. Oh man, what? So what if they come back down, but they continue to steepen? Like I was kind of assuming that that the spread was about to come back down and consolidate a little bit. But now all of a sudden, with the way that this is trading, I'm starting to rethink that. Like especially some of those takes in the 10-year. Okay. Let's reset that there. That was a pretty dramatic change in the order flow there. Bloomberg was talking about the spreads yesterday, but in Greek. So like here's the thing, is if we were seeing a rise in rates right now, like say the number had been really bad, I would expect to see them steepening. Like it's been rates rise, they steepen, and what we're seeing now was like is we saw the rates go down and they steepen. So I thought, okay, maybe if rates come back up, they might have to flatten a little bit. But then, like, so far, that's not what's been happening. On that move down, the 30-year came back significantly more than the others. Although it was really seemed like it was more in the 10-year that I saw like aggressive volume and stuff. Well, and that still looks kind of aggressive there at 18, to be honest with you. Look at that. The 10-year sure seems to be fighting the downtrend, though. Yeah, even though we've seen a big change in the volume coming down and selling, that doesn't necessarily mean that that's going to continue or that it's going to reverse, right? There is some stacking at 18 through 17. Ooh, that's maybe actually a little suspicious, though. Supreme Court rules against Texas in abortion case partially, but leaves law in place. Okay. You waiting for a long NES? They've been buying their NES, but ES hasn't been moving around away from that 4690 area. Shall we reset our DOM here? Actually, I want it right there. Yeah, okay. Because I want to remember where those stacks were at 18. Biden says, I anticipate lower prices in the coming months. Okay. Did you see that? Did not take very much for them to trade down through 18, did it? And they pulled it 17.5. Oh, was that a spoof? Were those spoofs? And now the 17's gonna pull too? Mm-hmm. That was very clear spoofing there. Okay, so the Treasury 10-year, the 17 is kind of was where there was support before. So see if there's anybody leaning at 16.5. Well, nobody's pulling. They're hitting into 16.5. Nobody's okay. They pulled a little bit and then it ticked up. That was funny. That the 16.5 pulled, and then as soon as it happened, they ticked back up at 17. So probably a few people are gonna try and lean on it here. Do see the spread maybe flattening back out again a little bit. So maybe over here in the 5-year is better. Okay, what was that? Did I close my 10-year one? I think I did. Hmm. Do we still get? We still have like another report today, right? Like, isn't there usually an oil? Oh, that's not until 11. The Baker Hughes rig count. Yeah. Okay. Well, we kind of had an impulse down there around the top of the hour, and it's kind of just been sitting here now. I'm kind of thinking about if we're getting a sell matter order coming in, they might want to chill here for a little bit, and they definitely don't want to push it too fast, because you can have a pretty large hole here below like 16 if you weren't careful, if you're not careful. Does seem the 5-year pushing it. Yes, still kind of struggling. I mean, they flipped it back up. It's kind of chopping, I guess, but to me, it kind of looks like they're struggling a little bit. I suppose another thing that we need to be aware of is that the treasuries may just be chilling out here, and that's the end, right? Because again, we were saying like probably the guys that made money are just going to take their profits and leave. Well, this trended a lot further than I would think. So there's that. And you can see here the 30-year lagging a bit. In fact, even buying a little bit there. Well, this is kind of that usual thing where it's like it's hard for the treasuries to come down when the 30-year doesn't want to go. So they're not getting anybody to do anything here in the 10-year. Hmm. Well, somebody biting in the 5-year. Initially, it wouldn't hold up, but now it is. It's bid. We'll see if the 10-year ticks back up. That wouldn't be a bad spot to try and buy the 10-year. Take a tick, but we'll see. It's a little iffy given the current volume. Market makers seem to be clamping down in these prices, meaning like they're taking more fills. Okay, the 10-year was able to tick back up. Oh, and both the 5 and the 30 went up on that tick. Interesting. I'm going to reset these. That. There we go. You guys are still there, but you're awfully quiet now, and I'm wondering, like, okay, so did everybody just take trades now? Because I am in a trade, but I wouldn't expect many people to be taking a trade there. Uptick, 2 upticks there in the 10-year. I think somebody's trying to accumulate some short. I don't know if they're gonna like ultimately win out here, but I think that somebody's trying to get themselves short in the 10-year here. I'm not really seeing it in the other ones, but I definitely think somebody's going short here in the 10. Tick off again. That is definitely happening from the liquidity, not the market orders in the 10-year. It's kind of also an odd time for that to happen. And and flattening as it happened too. Wow, is the 10-year yield actually there at lows? I'm kind of realizing that's like almost 2 basis points there. That tiny little move just all at once. Is it because the E-mini's dropping there? Kind of looks like it's because the E-mini's dropping there. Someone's eating a lot of selling. Well, I think that the market makers are just adjusting based on the ES, right? I get a little unhappy though when I feel like I'm just at the mercy of the S&P. Like if I wanted to trade the S&P, I would just go trade the S&P, right? But they came back to regular session lows quite quickly. Not really seeing any of the other assets really moving though. Build back better is to reduce inflationary pressure, huh? Is that why you put all of that and implemented it long before inflation was a thing? You know? Yes, you were really you knew that inflation was going to be a thing back when you set all of those goals during your presidential campaign. What a freaking joke. I feel like the White House is gaslighting us. They are. I mean, they're always gaslighting us, regardless of who's in power. But gosh. Well, I got a little bit of it. No, I did not. What the hell is wrong with me, guys? I didn't even get any favorable excursion on that. I don't know. Well, they might come back here quickly. We'll see. I think there's somebody is getting involved here though, because do you notice that on that move up that the stuff behind them is increased? And the stuff on the other side here is increased too. So like there's some people involved here. I find that a little, that's kind of curious. That's not what I would expect to be seeing right now at all. To be seeing the liquidity rising. Someone's definitely putting a spread flattener on here, though, I think. They should call it Build Back Broke. Yeah, the thing that surprises me about the thing is that they're still pushing to make it happen. Like, I would have given up a long time ago. I'm surprised that they still think that it's a viable thing. Hmm. 5-year kind of unflattened there a little bit. Is there a way to turn off light on keypad? I can't see the letters in daylight. What are you talking about? Like on a laptop? Probably. Well, it probably depends a little bit on what the E-mini is going to do, but the treasuries are kind of looking like they're going to try and squeeze this up again. It's trying there a little bit. He has to maybe dig itself out there, get above 87 or so. But also with the way that happened, like when we sold down initially, it was mostly in CB. I think that that looks like a BART to me. That looks to me like somebody sold the 30-year and then gave up on it. It's a little. It's kind of an odd volume. So turning off the light on your pad, usually there's a function button that will turn it off. But you look at your F keys, and one of those is going to be a light, and you push the F button and the F key, and it will turn off the light, the backlight. Well, there seems to be a bit of a liquidity hole at 20.5. Carl Quintilla retweets Giannis Miliak. The hopeful, we might hit the peak soon. Rent increases are cooling off based on real-time trackers. Energy prices have come down a bit. Economists expect used vehicle inflation to moderate. Oh, I answered his question. Cool. That helped them figure it out. Good deal. You know, earlier I was saying this inflation number probably shouldn't change anybody's long-term expectations. I'm still going to hold to that. I don't think that the Federal Reserve is going to change any of their opinions based on what we got in the CPI number today. But the liquidity that I'm seeing added here suggests to me that some hedge funds and banks are coming in here and making some positions. Right? Like something's happening here, and I can't really make any read of it from the cumulative delta, but we are kind of floating, feels like we're floating up a little bit. There still seems to be a bit of a liquidity hole at 20.5, but and again, I think the reason that we came up here was because somebody went short in the 5-year and took it off. At least that's what it looks like from the deltas. Well, there's a downtick in the 5. CIBC says priced-in rate hikes won't be enough to contain inflation. Okay. Who's that? U.S. inflation today hit the fastest pace since 1982. The rise in prices matched market expectations, and that led to a sigh of relief in risk trades. But CIBC is warning that more pain could come with inflation staying stubbornly high and the Fed forced to hike more than markets are expecting. For today's report, they noted that price gains were broad-based, with shelter costs continuing to climb and hitting 3.8% year over year. The other main factor is autos, with used price vehicles staggeringly up 31% year over year. While there were signs of supply chain pressures starting to ease in November, that could stall in the near term with the spread of Omicron globally. Well, I don't know about that part, but looking ahead, auto prices should ease next year as supply chains are sorted out, but the baton will pass to services. They also think gasoline prices will remain contained thanks to OPEC supplies. Okay. So they kind of disagree with a lot of the bank analysts on that one. Overall, though, they think the Fed and the market are both underestimating the need for rate hikes. With Powell having retired the transitory description of inflation and price pressures becoming widespread as wages rise strongly, it's clear that the Fed will be accelerating its QE tapering at the December meeting. It will likely end tapering in the early spring to allow for a Q2 rate hike when the winter COVID wave is expected to be behind us. And the Fed will want to lean against cyclical inflationary pressures to contain inflation expectations, but it's going to take more than the mid 1% Fed funds rate that the market has priced in beyond 2022 to slow growth and contain inflation on a more sustained basis. Okay, and Octavius is saying there's a large offer in TN. Nobody wants it. That what came in and started pushing us down? Well, when you look at the chart, that decline out of the liquidity hole at 20 looks kind of like a big drop, but it's actually just kind of a drop in the bucket so far. The selling was most extreme in the 30, though. The CPI, the headline CPI was slightly higher than anticipated. It was spot 8 versus a spot 7, and the core CPI was in line with the expectations at spot 5. So it's still very, very high inflation, but it was about what everybody expected. So probably here today in Treasuries got a lot of short covering, right? Maybe they're done though. I don't know. We're definitely still seeing here. It's just curious to me. We've come back out of that liquidity hole now at 20. We're ticking down. They're still putting a decent amount of liquidity at every price now. I think that there are some big players involved in the market, but they don't seem to be giving us any signals about which way they're trying to position themselves or what they're doing. Although perhaps that offer in TN that I can't see because I don't put that instrument up could perhaps be a hint. And there's another downtick. So again, though, this downtick was led by the 30-year, and we're starting to see some steepening again. We're starting to see bear steepening. And by the way, this is in spite of the S&P 500 kind of struggling still a bit. So we felt like for a while that we were just kind of at the mercy of the S&P, but that situation, at least for now, has changed a bit. And we should also remember that it was the 18 to 17 area where there was kind of like what we thought was some spoofing, and they pulled. And then when they started to push into the 16.5, I didn't necessarily see people like actively leaning, but they just kind of, when people didn't hit into it, they just kind of start buying it. So I don't know if that has any relevance to what it will do if they get down to 16.5 again, but it's just an interesting thing to note and remember that happened, right? Well, I don't know what's wrong with me today, but I'm like peeing like a racehorse, so I'm going to take another break. I guess the other thing I should note is we are getting close to when I usually quit, but because I have the day off today, in fact, I'm going to have the next 2 weeks off, I will stream until the European close. With all these but I still have plenty of water though. I don't know why I'm peeing so much, because I haven't actually drank that much water. Must have been, I had a Dorito yesterday. It must be the Dorito. Maybe I'm not eating enough salt in my diet. Oh boy, Lindsey Graham tweets, I just received the new CBO analysis on Build Back Better without budget gimmicks. Wow! Exclamation point. Stay tuned. ... Gary says the market didn't care about the higher CPI print. Well, I mean, I don't think that the CPI print changed anybody's expectations. No, but obviously it led to a lot of orders, especially in the treasuries. Probably some guys that were short that had to cover. It really was close to expectations. If that core had been slightly higher than anticipated, then maybe it would have been a different story. But I mean, the thing is that off of the original news, well, maybe not. I initially, my DOM initially reset the other direction. So I was a little confused at first because I was like, no, they're going to buy that. Why do you guys talk? Dude, this drives me crazy. The yearly number doesn't matter, guys. The media uses that number because that's what the people at home that don't follow the markets like to hear about. But for us, the thing that's changing, the new piece of information, is completely contained within the month-over-month number. So I don't understand why you guys keep talking about the yearly number. It doesn't matter. And for that matter, I would use the core inflation rate in this instance just because we saw a really big price decline in oil. And since it was oil was the thing that was higher than expected, you know? Yeah. Well, folks, they came down there right back to that place where they had been leaning. And once again, they're kind of ticking up and kind of doing so fairly quickly too. It doesn't matter. Quite listen. Nobody at Goldman Sachs or JP Morgan is sitting there and looking at the year-over-year number first. Okay? When the news squawk reads it out, they read the month-over-month number. The month-over-month number is the one that matters. If you're trading, you should be watching the month-over-month number. The year-over-year number is just good for headlines because it sounds so high. So they kind of ticked back up a little bit there, kind of acting like, oh, maybe we're going to go up for the highs again. But like, look at the 6J. 6J is still languishing. Maybe pushed down. My coffee tastes like powdered mustard. What the hell? You are stupid. I on some things, Gary, listen, we're all dumb at some things, but you say a lot of stuff that makes me go like, what the hell is this guy thinking? Like just straight up. I think that anytime the basis of your argument is, well, I'm really experienced and I really know what I'm talking about and you should just trust me on this sort of a thing. Like, I think if that's your first argument that you go to, then you should be taking a step back and be going, wait a second, there's something wrong with me. Because my first argument should be, well, here's why this number matters more. There should be actual like points, right? You only revert to the I know what I'm talking about argument after you've given them like 3 arguments about it and they're clearly just not going to listen to you no matter what, right? And then you go like, yeah, okay, well, like, I do this for a living and this is all I think about all day and you're just some random internet that's the sort of thing that happens on that Reddit thing. How many times you've been wrong about it? Plenty of times. Remember when you said oil will never get back to $50 a barrel? You remember that one? Uh-huh. I know it's not something that I really keep track of, but you were wrong on a couple of key issues and I kind of stopped paying attention to what you were saying, to be honest with you. I was like, well, he doesn't necessarily know. He doesn't have a crystal ball like nobody else does, right? I don't think that anybody here in chat really tried to make a prediction on what the dollar was. Yes, you did. I was like, shouldn't this be a good time to buy it? And you're like, nah, I think that these lower prices may be like a new normal for a long time. I don't think we're ever going to get back up to those high oil prices. And then what do you know? We went right back up to 70. He said this back when oil went negative. Do you guys remember that? Oil went negative, and I was like, well, maybe we should go and buy some stuff in the stock. We should buy some oil stocks in the stock market. He was like, nah, I don't think that we're ever going to get back to like $50 barrel oil or anything. And then didn't take long for it to bounce right back up to 70. It seems like it didn't take long. I guess it was like a year, right? But it was a year and a half for it to get, well, it's been almost 2 years now for it to get here, but that happened. We could go back and we could find that day and we could find what you said if you want. Shouldn't be too hard to find that day. It's either the day of or the day after. Let's see here. Where was it? One day. Okay, so it was April 20th, 2020. And I remember you saying something like, I think that $30 a barrel oil is the new normal. And that we probably will never get back to 50. I did say that Bitcoin shouldn't go under 20K, but you know what? Like, sometimes it does and sometimes it doesn't. I don't know. Like, the thing with Bitcoin is, again, like, Tether's printing, so, like, do we really have any ability to predict what it's going to do in the short term in Bitcoin? No way. But this one, I feel like this one coming in and saying, yes, we should buy oil stocks on this day. And if you didn't say that you bought oil stocks on this day, then I really don't think you can consider yourself an oil expert. I expect somebody in Bitcoin to be wrong all the time, but like, freaking what the hell? What the hell? Easy call. I did. You know what? I was off. So you didn't stick around to see what happened with that, Gary. I was a week off from making like 50K. If I had just bought a different week expiration, I would have made so much fucking money off of that. Here, let me show you that one. Oh, that was such a good trade, but you know, I don't know enough about options to really time it, you know? Oh my God. That was when MSTR was over 1,000 and we were buying the puts, like, okay, and I had the puts that were like that expired on when would it have been? What is that, the 18th maybe? No. It was I had the puts that expired in January. That's what it was. I had the puts that expired in January. And if I had the puts that expired like in May, or I had waited, then I probably could have made money. But actually, let me confirm that that's what it was, that I had January. You fear a correction coming into the end of the year? Normally, I would say that seems like an irrational fear, but the market sure doesn't look so hot today, does it? By the way, this trade just kind of fell apart while we were yapping. So that's my limit today. Okay. History, everything ever? No. Just show me like, how do I do it? Like, it won't let me go through all history. Okay, but it was Q1 of 2021. Okay, here we go. Oh, no, it expired in February. It expired February 22nd. So there you go. So I had it. Okay. So it wasn't, what I think had happened was I paid too much for the put. If I had waited, so when did I buy it? I bought it on the 28th. Okay. January 28th, right? Oh, there we go. Is that right? Yeah. So I had the overall trade correct, but obviously the timing of it was off because MSTR did fall back, but if I had gotten prices up in here, I would have made a ton of money off of it. How much was it? Yeah, I lost about $97. Actually, how did you must have been watching because that's almost right on. Was 98 actually. So it's so frustrating to me when you like you're like you tell somebody where the fault in their thinking is, and then they turn around and they go and they use that same logical, they try and use that same logical fallacy, right? Have I made bad calls? Yes. Have you made bad calls? Yes. Does it have anything to do with which number you should be paying attention to more when the CPI is released? No. It has absolutely zero relevance, dude. You think they can go much higher today? They're acting like they're just going to keep going all day. No, I did that off stream. I guess you can prove it if you really did. No, it doesn't give me timestamps. That sucks. Now, like, they're stacking right there. Jeez. No, I think that Ace just stopped coming around because I got tired of him. I told him I'm tired of you arguing with you about things that you're wrong about. So no, I didn't lose $97 for that put. No, that's not what that was. No, it was more than that actually. That one says bye. Good grief. The way that the 10-year bought up there was actually kind of like something else. Like, fine. I don't. To be honest with you, Gary, I think you're full of shit. I think that what you do is I think you come in and you'll say a few things that are useful, so that people will believe you, and then you start feeding them bullshit. That's what I think you do. I think you come in here and you're trolling people. You've said so many things in the past that were like dead wrong and stupid. And now you're kind of sitting like saying, oh, like I was kind of messing around with the trades you were taking. Like, okay. I don't like being mean because it's like I don't know what Gary Rich is thinking, right? This is just like probably my own conspiratorial money. Why? No, and I also think that you're trying to come in and to promote yourself or something because you're continually trying to come in and say like, well, let's bet money on it. I don't think you're being honest with us. I think you're lying to us. And I have no interest in doing like a bet. Like if I like a trade, who gives a fuck, Gary? I don't give a fuck how much money you have. If you're wrong about something, you're wrong about something. And if you're an asshole, you're an asshole. And I preferred it when you were gone, to be frank with you. And I'm not in here. I don't do the stream to come in and get in some sort of ego pissing match with you. Well, that was no good. I didn't set my take profit target there on that, so I'll do that. Why? See, here I go through. Like, what the fuck is wrong with you, dude? Is there like a screw loose? Are you not? Are you just? Maybe you're like too far back. Like you're not live. Like, did I just explain to you why I think that you're full of shit and that I would never take you up on a bet like that? Because I think that you're lying and trying to manipulate to people. And then you're like, okay, then let's have a bet. No, go the fuck away. Seriously. Jesus. No, here, I like, I will help you. I will help you. Wait, where is it? Where even is my, oh, it's over here. I will help you. Go the fuck away. I have no interest in playing your stupid game. Jesus. Well, if I had put my limit order out there when I had first taken that sim trade, then it would have gotten filled, but that time it did not. And I kind of feel like I should try and scratch it, and we'll see. Yeah, that was a pretty massive banhammer message that came through. I hate sitting and being like conspiracy theory and everything, but you guys see the pattern, right? He comes in, he'll make a big issue over a really tiny argument over something, usually something that he's dead wrong about, and then he'll say, well, but I'm so smart and rich, and then he wants to make a bet about something, about whether he's smart or rich, as though he wants to try and I really feel like that what he's doing is he's trying to undermine the stream. I think that he's coming in and he's he does stuff to try and get us to trust him, and then he tries to undermine the stream. That's what I think he does. You know the volume profile the Jigsaw puts in the down? Sure, what about it? Yeah, I can't. Please kick him out. I can't stand arrogant people. All right. Like I'm sitting here and I'm like, you know what? If he does have $1 billion or whatever it was that he was saying, like, it doesn't matter. You're still an asshole. And I don't want the people around here that are going to make a big deal out of how much they've made or whatever the deal is, right? It was so mind-boggling to me. I just don't understand what it is. Am I fighting too much against human nature? Is there something about the way that I'm saying it that's not clear? Guys, how you performed doesn't matter. If the market behaves a certain way, if a certain thing is true, then you should be able to use logic and evidence and empirical evidence to be able to prove the claim. The things that I share with you when I make the one-off videos, the things that I think are going to be useful to you, I don't come and make the argument, I've made so much money off of this and you should try and use it too. That's a logical fallacy that scammers and grifters try to use to manipulate you. Use empirical evidence. If it's really a thing, they should be able to provide empirical evidence. Okay? Now, in this case, I'm using logic, but here's the experiment that we could go and we could do is we could say, is there what is more predictive of what we're going to do? The month-over-month CPI number or the year-over-year CPI number? And what you should find is that there's not really a difference. It's just that you can tell what the change is from the month over month more easily as a human than you can the year over year, right? Anyways, I say this, I make this like the basis of the channel, okay? And I am explicitly tell you guys that, hey, trading futures is very risky, and even if you're doing everything right, and you're really good at it, you're probably still going to lose money, right? Okay? And then everybody that comes on here and talks to me tries to fight me on that. Like, well, yes, but I can prove through my own... No, nobody gives a fuck, dude. Empirical evidence, or get the fuck out. Why? Why? I'm so tired of dealing with that. And it was like I dealt with people that have been around for a long time, like Ace. It was like, I don't care, Ace. Empirical evidence, or get out. and when I start to get those sorts of things, when even after I'm saying it, these people continue to insist on pushing that point, I can only assume that they've just been trolling the whole time. I mean, what other logical explanation is there? Because I can't. Well, I guess the other logical explanation is that some people just really have big egos and think that they're going to get validation for their egos through this streaming chat, which I think is really silly. Like, if you want to go and validate your ego, go make a stream. OBS is really easy to download, folks. If you're so great, I'm sure that people will love to watch. Because I'm not so great. He did, but again, live action, I feel that he shares information to gain our trust so that he can then turn around and say bullshit. Because you'll notice that it will be like information that's not really directly relevant to what we're doing. I guess we did the volatility ranges, would kind of help, although that's very imperfect tool. We could probably, I'm hoping that when we get some machine learning and more statistics involved in here, that I should be able to make better tools for that sort of a thing. But geez. But that's not what the thing that makes me feel like that he's trying to mess with us is that it always comes into, well, I'm going to disagree with you on something. Well, I'm really, really smart. Well, then why don't you make a bet? It always comes into that let's make a bet. Even though I've said like many times why I wouldn't do that, right? And he continues to push it. And why would he continue to do that? And I think it's because he's trying to undermine the stream. He thinks that what if I could make a bet and then prove Seth wrong on that bet, and then I could hold it up as this, oh, look, see, I was right sort of a thing. And he might be one of the people from like other channels or something that are trying to like screw us up, right? I don't know. He didn't show any of the hallmarks that I get from like he who will not be named. But $1 million. Okay, so you can change the time frame of the volume profile to anything that you want. But Kyle, the way that you do that is when you're coming in here and you're selecting the instrument, there is a session right here, and you can change which session you want to use. So I actually have mine set up here, unless I changed it. Wow, that's like it wants to use the default CBOT, but I usually what I do is I set this one to be extended session and this one to be regular session. Hey, Caleb says I had that very name in my mind just before you said that. It seems like something that he would do, but all of the tradecraft that we have that we use to identify him, Gary doesn't exhibit. So I don't know, but it sure does feel like that sort of a scheme. Like he's trying to get me to say something or do something that would be, like, look, I speculate, but I make no performance claims because I know that I make like huge mistakes all the time. I lost $1,000 on oil last week, right? So cut the guy a break. No, the one is far worse. Now I'm not quite sure what you're saying, Caleb. Like when I think that people are messing with me on stream, I immediately think that it's Vinny. But there are things that I've found help me identify him, and I don't think that that's Gary. I think that Gary is probably doing something else on his own. Who knows? Yeah. Okay. Yeah, I get you. It still seems like that he has an agenda, because it always goes to this. It's like something where you're like trying to do some sort of social engineering thing, and you're too anxious about it, and it's like it doesn't work, so you go away for a while so that everybody forgets about it and then comes back. Like that was immediately what I was thinking. So it's like he comes back earlier in the week, he gives us a link on something that is somewhat useful, and then he starts talking shit and trying to make me do a bet with him. Right? And then I'm sure that if I took the bet, I'm sure that he would say if he won it or not, he would turn around and be like, "Oh, see, Seth did this," and be trying to post it everywhere or something. I don't know. It can be frustrating because, the market is more informationally efficient, is more statistically efficient than it is informationally efficient. I don't like the way that I say that. We need to come up with a better way of saying that. There's more edge in understanding the news in the market than there is edge in the chart. Okay. And you might have an informational edge, but doesn't matter, because all that matters is the flow that's going to come in here at current. And the flow that's going to come in here at current, could it have reversed back down today? Yeah. Could it trend all day today? Yeah. I'm not sure I really have a way of telling. And I'm thinking I'm taking a small trade, but it's like they add up, And turning questions into an attack response will be aggressive. Yeah, I don't know. It's just like, and then again, like I'll respond to a question and point out a fallacy, and they'll go back to the fallacy, which I mean, I guess people just have a tendency to do that, but oh man, it drives me crazy. So my wife, I remember I told you this story the other day about my wife was mad at the teacher because she didn't let our daughter call into the office when she had a cluster headache. And so the teacher, they got a third teacher involved, or a third individual involved. And the teacher that she was arguing with started talking about all of this other stuff. And she's like, "Oh, no. Like, I immediately realized that they are trying to change the subject." I was like, I blame you. I blame you. As soon as somebody changes the subject, I'm immediately like, oh, okay, they're up to something, or they don't have a good argument anymore. And what do you do about it? Yeah. That's not the same as an intraday volume profile, like a volume profile for the last half hour. Yeah, my volume profile in ES might be messed up on the session that I've got. Oh, can it draw an intra? Wait. Oh, can I set the DOM to do a volume profile for the last hour? I don't believe you can. You could use the Jigsaw charts to do that. But I don't think that you could make the Jigsaw DOM just show the volume profile from the last hour. Maybe it's possible. Let's just come in and look. I think that if you could, that it would be under the volume profile settings under appearance, right? Volume profile. And then, no. So you could change the histogram and the location, but I don't think you can. Nope. But if that's what you want to do, I don't think that that's how I would do it, to be honest with you, Kyle. Here's what I would do. I'll open a new DOM for you. I'll do ES. Make sure this session is CME indices. Okay. And then I'm going to change some settings here. And I'm going to get rid of the order column. And I'm going to add the bid and ask profile. Okay. So now you got a volume profile on the side here. And you can push this recycling bin and it will clear it. So you can set when you want it to change. That's how I would do that. And that can be really useful for these more slippery instruments, right? Because even trying to put the clear trades timer interval in here to like 10 seconds is sometimes not, like I'm on oil, I kind of question if that's enough. So that's how I would do that. I wonder, what are the bid profile and ask profile? Oh, do they not have? Oh, total at bid. Yeah, you can't change much about it. Yeah, you could put a little chart alongside it. The thing is that over here in the treasury, it usually can tell you what it's going to look like, right? They're very clearly rotating around 22 right now. Now over here on the treasuries and everything, I'm kind of thinking that, like, when I was looking for teeny tiny little trades in the micro treasuries, I did well for a really long time. I'm not sure what's changed in me or the market or what that has had me so off lately. Like I could have bought that, right? Like there was plenty of opportunities to buy the treasury or, to sell the rates here. But I thought that they were done. Probably though, if they were done, they were probably gonna, but like they'd come back a little bit in range there. So it kind of seems like a dumb trade to make, right? But I'm just kind of like, I'm thinking, or how do I say this? If you're just trading a single micro contract, you're not going to make money long term. This is what I think. I think that you can make money from like doing market making sort of thing with multiple contracts, which is also difficult. But I would just doing one. There's too much noise in the market for that to work. So what do you do? I don't know. It seems like the sorts of things that I could find an edge that might work all involve having a lot more money. Well, I take that back because we could still swing, and I've had some success with the swing trades, and maybe I need to follow more of a CTA kind of a model because that's what most people in futures do is CTAs. So maybe you need to go to CTAs and try and leave the scalping to robots. I don't know. Or just, another part of it was that when I was doing well, I was restricting my trades to news and so forth a little bit better. So I don't know what I want to do. But I kind of feel like I'm close to of like putting all the information out that I can, and that coming here and like trading it on sim would be like fun and I would enjoy it, but that I wouldn't really be helping myself or anybody by doing that, So we should be thinking about making a change in what we want to kind of try and do next, I think. Because we gave it 3 months, longer than that. And like maybe I could say I stayed small and was a little bit more selective. I could have done things right, but one, I'm not sure if I'm capable of doing that. But two, you're not going to make enough money doing that to justify doing it. No responses. I was hoping you guys were going to check that was going to give you a thought about. I would really like to see you do X, Seth. No. Well, the 30-year came back down really hard there again. I think if we were of the mind that this is a trend day, that I would want to buy the 30 here, but that volume looks awfully. I should probably just walk away and stop looking at it and hope that we get some good opportunities next week with the Federal Reserve meeting. So I think that we could. And then if I'm still feeling really awful next week, then I might just... I don't know. It's kind of frustrating to be like, okay, what is the reality of the market? What is the reality of the market? And then come across something that really truly has solid evidence behind it. And what you learn from it is that it's going to be really hard for you to do what you're trying to do. I think for me to just like try and blindly follow somebody else's strategy, I would probably need 4 years of statements. Yeah. If somebody could show me 4 years worth of statements, could guarantee that was their full trading, then I might consider looking into what they're doing. But now the issue with Gary, Kyle, is that as far as we know from what he's told us, all of the money that he's made has come from Bitcoin and options. It isn't really very applicable to what we're doing in futures. They're different games, they really are. And what you do in stocks is a different game from treasuries. My understanding is that the game in stocks is just is more rigged, and that you still lose money doing it. But I'm looking at what we're doing here in futures, and I'm really starting to wonder, like, I enjoy doing it. I think that somebody has to do it, but I'm really struggling to. I don't know if I can do it. No. Okay. So again, if somebody says something, okay, and it's wrong, I don't care if it's Warren Buffett saying it. They're wrong. They're wrong. And if I think that they're wrong on it, then they're going to have to come up, and I'm going to listen to their advice. They're going to have to come up with a good argument. And if their argument is just, well, I'm Warren Buffett, then that's a shit argument. I know that that's like a really extreme take on it, right? But I'm just saying that arguments should be able to hold up on their own based on the logic and empirical evidence. And if somebody comes in and they try and use appeal to authority as the basis of their argument, that is immediately I'm going to ignore it. Well, okay, so I say that higher time frame analysis doesn't lead to better trades. I say that technical analysis doesn't work. That's what I say. Because when I say, like, you want to use an informational edge, for instance, that can kind of be considered a higher time frame to some extent, right? And you've been seeing how, as I've been doing that more, that I've been trying to take higher time frame trades too. I don't know if it's really been working out, though. There's other problems with that. I think that I would need to be holding them for a lot longer than I want to. I think that if I was doing this as a CTA, that I would probably be like in a position for most of the contract or something like that, you know? Like trade it with a micro, but it's, you know, have a maximum loss of like $1,000 potentially. Does the latter work? Work is a relative word, right? Is there some edge in using the depth of market? Yes, there is. Is that edge going to make you a profitable trader on its own? No. Kyle says, I can't question if you would believe technical analysis works if someone showed you a solid trading history, because I don't believe someone is going to show that, really. Haha, right. But I'll prove to you that higher time frame with 4 years. Like the thing, you got to realize that when we're talking about higher time frame stuff, it's a different game, right? And the qualifications are different. So like if you came and showed me profits over a 4-year period on higher time frame, that would be great. But the litmus test then would be how well you performed compared to the underlying instrument that you were trading, right? When you're scalping, that's, you know, scalping is so hard that if you just made any money that you're probably, you know, over that long of a time, then you must have some sort of an edge. I'm really not sure if retail traders can do that these days, to be honest with you. I'm just, you know, the issue with being able to be at the front of the queue is a really big issue. With that said, can you see something? Not quite. Well, so like for instance, one of the things is like catching the edge, like seeing that this is 500 and this is 2000. I mean, I guess if you have a chart indicator that shows you that, but then you're just putting a DOM on your chart, right? But the whole thing about seeing what the limit, or see how many limit orders there are at each price and so forth, is there edge in that? Yes, there is. Or at the very least, it's something that you're gonna want to be able to see just to even be competitive. In the futures, I feel that that's the case. Yeah. But those things on their own aren't going to make you profitable. And the issue for me, it isn't even necessarily being profitable, but like I want to come about making money every month or every week, and I can't seem to find things that are consistent enough with that. I can find robot strategies that seem to make money over a year, but they're not consistent enough. You get what I mean, though? Like, it always just kind of comes back to, like, the thing that we're expecting is just unrealistic. And when you take everything back to, like, a realistic expectation, it's kind of like, I'm not sure that there's really any reason to ever do this unless you're going to do it professionally. And if somebody wanted to hire me to trade, then I would love to do it, but I don't think that that's ever going to happen. I mean, now it could just be me. I think that there is a lot of me. Nah, I don't really do TA at all. I mean, I know all the TA, man. I've done every little TA sort of thing there is. I've looked at it. At least I understand what it is and how the people commonly say that you should utilize it. Right. So I can guarantee you what's going to happen. Somebody's going to come in here and they're going to be like, okay, you need to come over here and we'll put on a super smoother. Oh, where is my super smoother? Do I have one inside here? Where's my super smoother? I'll use the one inside of lizards. Super smoother. That's not drawing. What the what? That's freaking annoying. Let's try doing it this way. ZN 1 minute. I'm getting off my game now. It's late enough that I'm like, ugh. I was really thinking about not taking any trades today too. That's another thing. I really should have just not taken any trades today. There we go. Sorry that they used a shitty color. Okay. Use I like more like a cyan. And let's make the period 45 minutes. There you go. Okay. Anytime that it crosses above the super smoother, buy it. Sell, buy. Take profits, buy. Take profits, buy. Yeah, it would have worked every single time, guys. Don't you see? You should use technical analysis. That's the way that works. And then you go and you run that on yesterday. Oh, actually, that would be the perfect example. If we come back over here, if we go to yesterday, okay, now you've got a problem, right? Because you buy it. Well, say you sold it. Okay. And then sold it again, I guess. Well, we'd have to go back. Sell it. Then you're gonna lose. You make money, but then you're gonna lose money on this. I don't know. What would be general signal to enter a trade then? Just volume, general previous weeklies. Oh yeah, so there's a couple of things that I kind of look at. It's really kind of a an amorphous thing. So one of the things is that I really try and watch for something in the like if I wanted to buy it, yeah, I could buy it right there at 21, right? That's a sim order, right? So I'll let that go in there. I can get an easy fill there. Okay, there we go. I got an easy fill. Now I don't like the way that they filled me because they stacked 3,000 on top of it when it happened. So that might be reason to just like immediately bail on that. Okay. But say we're buying, that would be one thing. The next thing is that I'm going to do is if we come back over to this chart here. I'll remove that. This chart has been having some problems for some reason. There's something in the data that it doesn't like. So I'm going to try refreshing it here. Okay. So the next thing that I'm going to be doing, the next level of it, I guess you could say, is like, what is the volume currently doing? So like, am I seeing a change in the liquidity and the market orders that would justify me taking it, that, it might say that the future order flow is changing, right? So here, I think maybe, yes, we do. There is like some buying coming in, right? But it got smacked right back down again. So it might not necessarily be a good trade, right? I kind of took that one just to show you like, I could get filled. Now, next step higher, I'm already like, maybe it's not a good trade. Maybe it reverses. I don't know, right? Then the next thing that I'm really going to be looking at is like meta orders. So like here was a meta order, right, at 6:30, and then here was another one an hour later at 7:30 when the S&P 500 opened. Okay, and then there was another one around 8:15. So when I'm seeing meta orders, I usually want them to be like 45 minutes apart because that's how long it tends to take the order book to recover, right? So if the last one was at 8:15, then the next one would be at 9, we didn't get anything. Okay. So this right here to me is like a Friday, this market, it's dead. So again, probably don't want to take a trade. Right. And then I would be looking at like the next higher thing up would be like, is there a reason that I should expect to see future selling? Well, I think that you could. I think that you could say, yeah, even though there's all these guys that have to cover, this isn't necessarily like a really dovish print. I think a lot of people will make that mistake and say, well, because it moved up, that CPI must have been really dovish, must have really reduced the Federal Reserve's probability of them tapering and, raising rates and all of those sorts of things, right? Nah, I don't think it changes that at all. It's just short covering, right? But so based on that, we could make the call that at some point it's going to sell. I think that we're going to need to have a specific reason for it to sell. I thought that maybe the spreads could be a reason for that, and it didn't turn out, right? Earlier. Now that it's so late into the session, probably I can't justify it, right? And so that's basically like the gist of like how I would be deciding what an entry was. And then there's just kind of watching it and seeing, and you kind of get a feel for it somehow. I don't know how that works, but it does there does seem to be some edge in that. Like, you do get better at it for some reason. Your brain sees stuff and patterns and so forth. But again, you're still kind of like TA. And the whole thing is, what are going to be the future order flows? Can you really reliably predict what the order flow is going to be in the next 30 minutes? It seems like that the number of situations where you really can are few and far between. And there's enough volatility in that it's really hard. It's just really hard. If you want to come in and you want to have a consistency, well, that was -4. That was awful. I want to come in and have a consistency. Like, I'm just not quite sure how I do that, how I sort that out. Yeah, I feel kind of bad because, like, I don't want to be, well, maybe part of it is just ego. I don't know. Like, you want to be able to come in and say, well, like, you can make money and I've done it and you can do it too. Like, that's what everybody wants to say, right? But everything that I know, like, I think that there's reasons to do it. And I think we can continue doing it. But I just don't want to give anybody the illusion that they're going to make money from doing it, because you're probably not. And if you do make money, you were probably just lucky. I feel the more I learn, the more worried I am about taking trades. Yeah. Well, because again, like, it's like a competitive game. Like, what happened yesterday? Like, they freaking come for you. Lost a ton and you can't lose anymore. Yeah, well, like, if you picked it up when you were unemployed because you thought that was going to be a new career for you, then just stop. Just stop. I think the problem for me is, like, I love doing the trading and everything, but I need like a side gig. Like, not like I need a side gig because I don't have money or anything. Frankly, I make more than I need, but I'm bored, you know, and I feel like that I put energy into something and then I get nothing from it, you know? And doing this into trading isn't helping. Having been trading for so long and coming to the conclusion that I'm probably never going to get very much from the trading itself is not helping me. You just kind of get into this, like, existential dread spot where it's like, it doesn't really matter what I'm doing. I'm doing it because I enjoy it now, and that seems like kind of a shit deal, doesn't it? You still go to, well, if you go to college and you'll enjoy trading, is it tenure trading? It sure feels like it, doesn't it? Could be that now that I've given up on it, that they're going to reverse this whole move. That's usually what it does. That's where I come back into this spot where it's like, well, I can't be entirely sure if it's just that you're just guaranteed to lose money, or if it's something about me. Like, and frankly, even streaming could hurt, right? Because especially today, as soon as it's been down a little bit, that I think, okay, yeah, like I think that now we have a good chance of this being a reversal, and that's exactly the wrong place to get into it. What do you mean? Like, they told me the same thing about poker. I went to Vegas and studied everything. True story. Won 90 consecutive games. Pit bosses and dealers asked for lessons. Wow. You can make money. Oh no, the market is not a random walk. I don't think yet. Don't get me wrong. The market is not a random walk. There are some empirical properties of markets. There are 4 in particular: volatility, autocorrelation, square law of meta order impact, inverse sine law after a meta order, and liquidity holes are 5 empirical properties of markets that are well proven by scholarly researchers at the world's best universities that the market consistently follows. The problem with all of those things that I just talked about is that how do you make money off of just those things? Because you know how they make money off of these things, right? Is they have the market making robots. Those are the things that the market making robots are based off of. So how are we supposed to take advantage of it when we basically have to do a position swinging? I'm not sure that I can. You know what I mean? Like that's where it just comes back to, like, you can make money in markets. I just don't think you can make money in markets doing it the way that we want to do it, which is basically day trade scalping. Not unless you're a robot or you have a robot putting the orders out there and giving you the Q spot for you. If I was always at the front of the queue, then I could probably make tons. If I was always at the front of the queue, I think I'd be really good at it. But to your other point, Patrick, that there's too many variables affecting outcome, it's like, yeah, like the amount of randomness that's out there compared to what the empirical properties are, it basically means that you're not going to make money from technical analysis. It reminds me of the line in Tombstone when Earp's wife's complaining that he's gambling, and he says, "I'm not gambling, I'm playing poker." Well, what is the definition of gambling, man? It's like, I think that gambling is a word that is used to attach moral, to say that the thing that you're doing is immoral, right? There's signals that could tell you future prices to the tick. What's difficult is the ups and downs between now and then. A lot of the stats that people are trading off of out there are like not what they think they are, but yeah. The good old buy into a new crypto with strong narrative and you're retired, though. Well, maybe Garlic Coin will, as of yet, increase. That one hasn't been so hot either because they've declined. With the Bitcoin market coming down, we've lost like 30%. It sucks. It's all in my mind, it's imaginary money anyways. I didn't pay anything for any of that. Mind it. But I made a TikTok the other day that was like, well, you're not going to make money from trading, but is it worth doing? Yeah, it's worth doing, and you'll trade and you'll learn a few things. But like for me, it's like, well, okay, I traded and I learned a few things, but now what do we do? Now what do I do? And I have this wonderful YouTube channel Even though people on stream frustrate the hell out of me sometimes, most of you guys are good. I don't want to stop doing that. But like I need to do something different because this is not like making me happy. And as the more unhappy I get, the worse the decisions are, right? And I go so quickly from like just winning and smashing it out of the park every time to like dismal results. So sick of it. And it's unregulated casino for retired Wall Street traders. We need to predict the next narrative, and it should coincide with low cost, environmentally friendly. And I think that most of what happens in futures is CTAs trend following and hedge funds making short-term bets and people hedging. And how those particular activities when they happen and the circumstances in which they happen and so forth is difficult, if not impossible, for us to really know and predict. I mean, there are some, like I said, there are some cases where you can. Like, there's so many times where I've been like, okay, here's the situation and here's what's happened. Even today, I've kind of called it, right? Like, I don't know why I took any trades off of it, because I really should have just been either long saying it is going to trend, or just not been long saying, well, they might buy, but I don't want to be involved in it, right? That's what I should have been doing today. So I think I'm just having an off day mentally. Which sucks because, like, when I came in, I was feeling pretty good, but maybe getting the initial thing wrong was just too much. Why is the school... I hate it when the school leaves freaking messages and shit. I hate the hell. I really hate that. You don't... Well, I try to keep my size small. When I start sizing up is when I really start making mistakes. I think that last trade that I took where I had 3 contracts on was pretty ill-advised. Could be... But the reason why I started messing with oil was because I realized that even though what I was doing was working, it wasn't worth it. You know? But the other thing is that market was just like favorable. The treasury market this week has been very different, hasn't it? Not sure I can completely explain all of the action this week. Even when I was doing well, it would really only happen because I caught like a really big swing. But like all of the individual little moves in between, like where it's pivoting and stuff, I was just like, I was getting them wrong. I was getting the wrong spot every time and was just able to hold out long enough that it went my way. Wasn't really very efficient entries, basically. But did oil mentally hit you? Yeah, it did. Yeah, it did. Like, the thing that's so on my mind is, like, I really want to buy a new camera. And, like, I really want to have success with the YouTube channel, you know? And, like... How do I sort that out? Because now, even if I was on my own, I think I would probably do worse live action. if I ever take trades outside of the when we're trading, I'm usually worse. I do think sticking to bonds just because I understand that market better is makes a big difference. I kind of like having everything on the screen just because people appreciate that. I don't know if it matters, but over Christmas break here. In fact, I think maybe even starting today. No. I think I'm gonna write some scripts today. We're gonna be trying to do some machine learning stuff, so that's gonna give me something to do at least. I'm more concerned about you guys. It's how can I have a good YouTube channel if am I really serving you guys well? Am I really giving you guys what you deserve? Because today I don't feel like I am. I'm dealing with shitheads and then just being useless overall. Everybody can see that it moved up, right? Now I could take the video camera and I could make another channel about something else. I just don't know what I would do. Just don't know what I would do. Well, I've been sat and moped about this for about 30 minutes now. I don't know if you guys have anything else to say. This is kind of stalling and stuff to see if you guys say anything, but I don't think you guys are. Yeah, if you had the answers, then you probably wouldn't be here, right? You think all the order books are confusing? Well, I honestly, if you watch, I only am really watching right here. When you watch me, I'm mostly right here. All this other shit is and then I care what the price is here, but that's it. You tried? Yeah, your charts is okay. It's not any different from what I've got right here. Between NinjaTrader and Jigsaw. Again, the thing you gotta remember that you might probably don't remember is we spent a long time just programming stuff. I've tried backtesting literally every strategy you could think of, right? Through NinjaTrader, and I can do it pretty fast in NinjaTrader. You put the cart in front of the horse? I guess maybe, I don't know. I really don't think that that's it. When it comes down to it, it's I can give you tools that help. The tools that you get when you subscribe to the channel are useful tools. Okay, I should really spend more time talking about and getting those tools out to you. And I think one of the things we'll do is we will change it up so that you don't have to subscribe to get them, because it sounds like you guys would rather just spend $100-$200 one time and then just have them. But knowing what the dollar is doing, knowing what the spread is doing, those are all really useful things these tools that I have to kind of help you see where the large orders are going. And so, like, those are useful tools, right? So I can give you useful tools. I can teach you correct information that we know is correct based on empirical evidence. But what we get once we get through all of that empirical evidence still says that you're probably not going to make money doing what we're trying to do, right? Octavia says you find the stream. Well, thank you. I appreciate it. I just... Yeah, and that's kind of the conundrum, is like, okay, I know that the YouTube channel is a good thing, and that it's been a good thing, and that we've done good work here. Is just the thing that I want to give you guys I can't, right? Because what I want to give you is you listen to me and learn everything that I have, and then you're going to be successful, right? And I can't do that. It's like, I'm basically telling you, come in here, come every day, listen, understand how the markets really work, but then realize that you're going to spend a couple $100 to learn all that stuff, and you're never going to make any money from it. You know, like that kind of, you know? Oh, that's neat. Trading is literally almost impossible. Yeah, I mean, it really is, though. Like, day trading is literally almost impossible. To make money doing this, basically, you have to like take on an excess amount of risk and have really fast execution. And so I get back to that, and I'm like, yes, but I need something else. I need to feel like that I'm being successful with what I'm doing, you know? And so it's like, oh, I need to find something where I'm doing that. Maybe I can't find that. But then if I go out and I look for it, I don't want to abandon you guys. I'm not going to abandon you guys, right? Or frankly, I don't think I could even handle like sleeping in. That would like kill me. Like just the thought of sleeping in every day, talking to you about it, that's the thing that makes me feel sad. That is so fucking weird. But sitting here thinking like, well, Seth, you could just start sleeping in and not trade. That makes me want to cry. I'm not going to do that. No tennis coach will teach you how to be world champion because there's no formula, but they can teach you the game and how to play it. Yeah, and I might... Yeah, so like I do weightlifting, right? And I've gotten pretty okay about what this is another issue I'm having right now, man. Like I know that my body is just not built for weightlifting. Like people will tell you, you just got to believe you can do anything, Seth. No, it's bullshit, dude. Listen, your body can only, there's a certain amount of muscle that your body will hold based on genetics, and there's a certain amount of fast twitch muscle fiber that your body will have based on your genetics, and you've either got the genetics for it or you don't. It's that simple. And if you don't have the genetics for it, you can have fun, you can get good at it, but you're never going to be like a world champion or anything, right? So what do? You do it because you enjoy it, yeah. Well, I do enjoy it, but I'm finding that when I know that I'm never going to be like, you know, world champion at it, it kind of makes it hard to stay motivated, right? And it's kind of the same thing here in the micros, is that the amount that I enjoy it, I mean, I enjoy it more than anything, I really do, but it's really hard still to stay motivated when you work hard, you have some success, and then you blow it over and over and over again. And I'm not 100% sure where I can lay the blame. Maybe it's just me. Like that's the thing, is like maybe it's just me. Maybe you guys can take all this stuff that I've given you, and you go and you make it success, and it's just me and my own mental issues and emotional issues that are preventing me from making the correct choices and being successful with this. But I'm starting to lean towards that that's not it. Oh, we got a link here. I'll click the link. Oops. I really hate the way that it does links. Tries to open it in the same window and it thinks that you're in YouTube Studio. Oh, that's so freaking annoying. Yeah, Debbie Downer, Disney World, though. Okay. Yeah. Now, what if the answer is macro trading? Why do it with futures? Or why should I do it with futures? You know what I mean? I do want to learn more about CTA strategies, because I'm like the people that do this professionally, they're doing CTA strategies, right? They're not market making. What we're doing is basically market making, and scalping is kind of day trading. They're not day trading. Let's put it at that. Let's consider day trading everything below, intraday trades and scalping and all of that sort of stuff. The people that are really making money from this, managing other people's money with this, as far as I understand, they're not scalping. They're not day trading. The only two people that I've ever heard of that I know made money from doing this was Anthony Crudelli and Navinder Singh. And both of them, it doesn't work anymore. So, and I'm not like, with the way that Anthony talks, I'm not sure that he has much success these days, to be honest with you. But could be wrong. Maybe it would be interesting to know what his performance was like this year. Patrick says that's more what I mean, holding for months. Yes, I think so. Yes. CTA. So CTA stands for Commodity Trading Advisor. And what CTAs do, Crudelli, he has a YouTube channel. You'll find it. Anthony, Crudelli. Anthony Crudelli. He has a YouTube channel that is sponsored by the CME. And you know why the CME sponsors him? Because there was a time he made big money from trading when he was on the floor. Then the robots came and it didn't work anymore and he had to change. And he trades smaller and he trades less. Yeah. So the turtle traders that they talk about in Market Wizards or whatever it is, right? That's basically the basis of CTA trading, as I understand it. I would like to go into a little bit more and see if I can find like a CTA strategy more like written out. Or maybe I can come in and do a couple of studies to do some on inter-day trades of that sort of thing. But I don't know. Oh, I had only just now looked at the question that Gus asked, and he was pointing out 4684. There was a monster order back there. Well, I can't really see it anymore. Wait, did I see it over here? Huh. Oh, I see one at 40. I saw a big one at 46.90. Or maybe that wasn't today. It's a big order. It's 1,000. Anyways, yeah. So CTAs, they're kind of trying to take advantage of trends because essentially there is like autocorrelation in the markets. There really is. How you like effectively take advantage of that is like a really different question though, right? And especially when it comes to such short time frames. Well, treasuries look pretty done now. Okay, well, we're done. I will see you guys next week, all right? Should be fun, and maybe we can get some... Maybe we'll get interest rates to rise next week, yeah? Meantime, stay profitable.